morning, welcome to the market view for Wednesday the 3rd of April 2014. Starting off with the daily chart, we can see that the market is stuck in this sideways range, and yesterday the market traded in a very narrow range, which we'll look at in more detail in just a minute when we get to the 30-minute chart. So we can see on the overnight the markets are trying to move higher. Yesterday the market opened, traded higher, and then came back and finished lower. So on the overnight the market's been trying to make some sort of ground here. So what I'm just going to do is delete all of these fibs just to clear the deck so we can see the market's trading between these, but let's just make it a bit clearer. So if the market's going to move higher for today, let's just put a few areas of where the market could move higher. Now the first high to the left of the chart, coming across from the right, is this one, and the first low is going to be this one. So I'm just going to draw from there to there just to give you the very first area of where the market's likely to find some resistance, and you can see that the market traded towards that area yesterday. Of course, this is a very narrow range, so what we want to do is to expand upon this, and then the next high to the left is this one here down to here, and you can see the market is already struggling with this area as well. So this is no surprise really when you start to see when you start to draw the fibs why the market is struggling. So the next one back is going to be this high to here, and again we're stuck in that same sort of area where the market's struggling there. And the reason I'm removing the 62% is because the market's traded through it, so just to keep things clearer. So you can see this 76%, and all I'm doing is just rolling back to each previous high just to find a 76% where the market hasn't breached yet, and we can see now we've got a 62 there and a 76. So I know in this area the market needs to drive through this and then up to the 167 area, coincidentally, which is the 76% area, 7 pips over, is where the market's likely to find some resistance there as well. Again, very narrow trading ranges at the moment, so we need something to break the market out of this sort of sideways pattern that we've got at the moment. And finally, the next high to the left is going to be this one, and then I will use this one here, and again you can see the 62% now is the high of this bar. So you can draw these all day long, just moving back to the highs to the left in an up move, and to the recent lows to the downside, so you can find out where the market's likely to stop. So these are all the areas where we can expect the market to actually stop and find some sort of resistance in this up move. Let me just spread these out a bit so you can see the figures. So this area has a high concentration of resistance, and like I say, to drive through will require some professional buying there. So what if the market is to move lower? So what I'm going to do, if you want to take a note of these, let me just drag these out a bit, and then you can pause the screen and take a note of these figures and place them onto a piece of paper, or preferably onto the chart with what I've just done there. So you can see these. This is the daily chart. We're looking at the background of the market where we can expect the resistance to be. So if you want to pause it and make a note of the areas here where we've got this resistance, then when you see prices stopping at these levels in the 30-minute or 60-minute chart, you'll know exactly why they're doing it. Of course, 167 is easy to remember, and 167.35 is between the 167 and the 167.50 area there as well. So I'm just going to remove these now, just to make life a lot easier when I draw in the potential for the downside. And as I did yesterday, we will start off. We've got this bar is actually the high and the low, because everything else is inside of its range. This is what's known as an inside bar, and funny enough, we have an inside bar for yesterday against the previous day's inside bar, which just goes to show how narrow the range is at the moment. And an inside bar is very simple. It's traded inside of the previous day's range, which means it's not breached the high or the low, which we can see here. So this low is higher than this low, and the high is lower than the previous day's high. What it means is nobody's placed a bid at a price higher than the previous day's high or low. So we've got these inside bars at the moment, and the first one is going to be this one. So I'm just going to draw off the high, which puts it back to the high side, which is not what I want. So I'm just going to do that again. It's actually off the low, and you can see the market is finding support at this 76% there. But what I can do now is start to actually roll back, and what I mean by roll back is go to the previous bar's low, to the high, and again you can see now why the market is finding support there. And just get rid of the 62 again. So just by doing this, I can see exactly why the market is struggling, or why it's doing what it's doing. And this one is the next low back to the high, and now I have some clear idea of where the market could come to the downside. There's no point in drawing any more than that on at the moment, because the market is trading in a narrow range. But should the market break this during the day, then I would just come back and go from this low to this high. What I want to do here is just to show you where the market is likely to find the support and resistance in the bigger time frames, because that's what stops it inside of the 30-minute. If you're wondering why markets stop where they do in the intraday charts, the 30 and the 60-minute, it's because of what's happening in the daily, which is why I spend so much time bringing this to your attention and showing you the areas where the market is likely to stop, so you can maximize the actual profits. So let's have a look at the 30-minute chart. Yesterday we had a long. We managed to get 20 pips out of that. I'll show you that in more detail now. So let's just switch screens just 1 second. Right, so here we have the chart from yesterday. We can see the market stuck in this sideways range, and then eventually we will see the market give a potential buy signal. So there's the buy signal. We're above the previous day's close, and then the market goes on to trade up to the entry price, which is now at the DP level. The daily pivot is a crucial area. The market needs to drive through this area if the market is to move higher, just as we saw it trade through the DP level there and then fail to close back here. You can see the market trading through and then coming back and then continuing lower. So this is an important area, so it needs to close above this area, and then of course in between all of this we have the 167, I think, area there. It's 166.44 there. Sorry, it's going to be 166.50. So the market needs to trade through this area as well. So prices, we can see the volume also increasing here, and also as we move high, you can see. Let me just pause this. We've got the first bar, the second bar traded through and then came back, and we can see the selling there in the red bar there. So there was some weakness in this area because it's a known area where the market has got to drive through, just as we saw the market trying to buy back through there. It failed and then continued lower. Just the same to the upside, or the opposite. We can see the market driving through, coming back, and then we see the market drive through, and then now driving through the 166.50 area as well there. So the market continues on higher, and eventually we'll see the market trading up to the scalp area, where, given that the non-farm payroll figures were out during yesterday, it's good to take the money off the table in the morning if it's presented to you. You will see the market go up to the scalp area in just a moment, and then above that we've got the resistance 1 area. So we've got the first resistance, which is the previous day's close, and as we've just seen in the daily chart, the market's been trading inside of the previous day's ranges as well. So the R1 would be a good place to consider actually taking the profits off the table, and there you can see the market trading up to this area now, and then it'll go just through the area and up to the resistance 1, which is where the market actually stopped, and then traded sideways to lower until the non-farm payroll figures actually came out. So there you see the market trading up to the resistance 1 area that's just there. This is about 23, 24 pips on the trade, so a good trade. You know, when it's at £10 a pip, is £240. And again, a very simple trade. The market gave the signals, broke out of the sideways range. We had some weakness here because obviously the DP level and the basic rules for daily pivots are the market has to trade through. If the market's above the daily pivot, then the market is considered to be a buyer's market, and if it's below, a seller's market. So the market will always have some sort of indecision around this area once it's traded through. You can see they're trying to come back on the downside, trying to continue back to the downside in the buy signal there. So the market needs an increase in volume, which we see here. So the volume is increased as the market drives through, needs the energy to drive through, and again you see the energy driving through the psychological 166.50 there as well. So let's go back and have a quick look at the news and what the market's doing now before we conclude. So the market on the overnight has moved sharply higher. It's traded back up to the previous day's R1 and also the 166.50. So we can see this 166.50 is giving the market a bit of a headache at the moment as well. So in order to drive through this, we're going to need to see a significant close and an increase in volume there. Yesterday on the 60-minute there were no trades. There were 2 potential ones, but they failed to actually fill. So let's have a quick look at the news, see what we've got today. We're going to look at the high impact ones. 9:30 services PMIs, no big deal really. Unlike the interest rate and unemployment figures and retail sales, I'm not too concerned about that one. Minimum bid rate for the euro and weekly US unemployment claims, which is no biggie really. ECB conference will be, because depends what they have to say about the European economy. That's at 1:30, which also coincides with the US trade balance. And we've got the ISM non-manufacturing PMI, which is out at 3 p.m. as well, so keep an eye out for those as well. Well, that's it for me. It's a bit of a long one this morning. Thank you for your patience and your support in staying the course. All things being equal, I will see you in tomorrow's market view. Have a great day, and as ever, thanks for watching.